down 1.4% move, and as dealers are negative gamma, that could accelerate things. So just kind of be mindful of that. And lastly, on the divergence front, what Christian's flagging here, a core tenet to our theme stack as well, is industrial production and data coming out of Europe shows, what we've been saying, and that's going to continue that recessionary environment over in Europe. But on the flip side, we've also got positive data coming out of Japan and India, and so we just want to reiterate our short Europe call, long Japan India call, and with that, I'll pause. I think Ryan, you're right off the bat.
Those are kind of more high frequency days, I guess. Drive on that. So we're going to start off with yesterday's bond report. So down day, that's a down 0.57%. Mostly technology and communications leading that downward, although energy was up by 2%. So also we did see pretty good volume yesterday. We've seen pretty good volume actually the last couple of days, whether it was up or down. So definitely something to watch there. And the probably volume for the CPI print. Go to the next slide. Rick did a pretty great job hitting on this in being number 2 this morning. So right before the close or yesterday, hopefully a lot of people talked actually the CPI print. One thing I kind of noticed in the Tier 1 data was the all control funds. Really wasn't going to have a lot of negative outflow unless the output, unless the market moves more or less than 1%. And so we'll see right now the market is pretty flat, which means that Tier 1 was expecting inflow from all. So this is what was going on around the CPI. So your best and worst ETFs. The best ETFs yesterday to be long was natural gas, Bitcoin sensitive, and energy. Your worst ETFs to be long were your cannabis stocks, Egypt, Pakistan, and construction, which is ITV. For the construction, it's a very rate sensitive ETF. But moving on to the next part of this is the extended eyeballs. So put a lot of the eyeballs in there that with pretty significant premiums and discounts. The ones that were within a bullish trend that have the premiums are gold, Turkey, and XOP. But big thing on gold was yesterday real-time alert, right? We saw silver was taken off. We're a little bit of a loss. Took it off. Because again, silver and gold are very highly rate sensitive, and pure yield is at the top end of its risk range. Although, right, we just had a reflation in CPI again, so another acceleration. You got oil doing what it is today, and then really this next chart, which is your U.S. implied rate hike. So the market does not think Powell is gonna hike. So you'll see next month they're applying 7% for this month. Applying a 7% chance of how to hike, and by the end of the year they're expecting a 50% chance of how to hike. So overall, market is applying no rate hikes. Where really, I guess I'll leave it to Keith on his exact thoughts on this, but Timberland was pretty clear on what he was thinking. In terms of your next one, which is your world applied rate hike, so tomorrow, 70%, market's applying a 70% chance of the Eurozone raising rates. And then overall, they're expecting one rate hike from the UK, one rate hike by Sweden by the end of the year. And after that, not really a lot more rate hikes on the board. So again, the market's mostly implying that they think that the rate hike cycle is over. And so kind of see what happens there. That's what's going on around the world on that front. Then next, just moving to the Eurozone. So a lot of industrial production data this morning. Eurozone industrial production came in at negative 2.2% year over year. It's been mostly a down trend since January. That is a July number, but then looking at UK GDP for July, also a deceleration. That one went to 0.0% on the next slide. But really big thing to know with the UK industrial production, manufacturing production data is that those were negative for 1.5 years. And some of the previous base effects are that August, July numbers. So again, we'll see what's going on there, but overall, it's been staying right around zero. So, in terms of the last slide I have here is on exports within Asia. And so, again, mostly just mixed bag for the last 4 to 5 months or so. Really the bigger call-outs are you get acceleration in Japan, acceleration in Vietnam, acceleration in Taiwan, and some deceleration in Singapore and Indonesia. Again, we reiterated our long in Japan this morning, and then come on, it trades a lot. It gets a lot of slack from NVIDIA. Semiconductors, sometimes it trades on economic data. It doesn't, but really, Japan, we still like. So with that, that is all I have for today.
Awesome stuff. Drago, I'll pass it over to you.
Cool. Thanks, Taylor. Thanks, Ryan. So, yeah, we got the CPI print this morning. You know, the boring.
And entrepreneurship. And that idea is in theory of economic development. So in some sense, it was really a very consistent story over 40 years. And what I think also was his objective was to create what Walras has done for the static economics or capitalism is to create a dynamic Walras. So it's actually to dynamize Walras. And it was probably business cycles were one attempt to do that. Maybe it's really impossible to get to such degree of sophistication in a dynamic sense because we know static pictures, but we really cannot chart the transition. And I think that was his permanent objective. And I think it's one thing that we need to associate, and I wish that actually people would, and I think people do. Schumpeter is with dynamic change in capitalism. Of course, creative destruction comes in that role, entrepreneurship comes there, but I think this is the core of Schumpeter's thinking as a young man, and then of course when he was, of course, towards the end of his career. Now let me put another, because I can go on, but I have to talk about the book now. One thing which actually is impressive is vehement, strong defense of points of view with which he doesn't agree. And that's actually a very interesting feature. Most economists or most people, when they criticize something, when they speak of something they don't agree, tend to be critical. Now, Schumpeter was actually very often in disagreement, but was actually defending some parts of that. That's most obviously the case in the case of Marx. Then another one, huge approval of the use of mathematics in history of economic analysis. Huge approval, and that's why this admiration for Walras. But on the other hand, not the use of mathematics in his economic work. And finally, in this book, and as I move to the book, believe an argument, little bit to the kind of épaté le bourgeois in the victory of socialism. But he was anti-socialist of an aristocratic bent of mind. So that's yet another paradox that I think he sort of exuded throughout his life. Now, let me go to the, let me just take a little bit of water. Let me go to the book now. First, you know, they're right, I mean, if I were to simplify, and I think we need to simplify, what is the message when it comes to capitalism and socialism in the book? The message is the following. Capitalism will fail, socialism will succeed capitalism and would be able to function at least as efficiently, and there are reasons why we can, probably more efficiently. Disagreement with Marx, it would not fail because of economic contradiction. Actually, if anything, it would be really the superstructure and not the infrastructure that would spell the doom of capitalism. So, you can say, he would say, Marx was right, but for wrong reasons. So let me go then over the argument that he made, and then I would go through these arguments. Then I would go through the arguments briefly on why socialism would be successful, and then I would try to actually answer the question which I think everybody who reads the book is left with. Why is that these predictions did not come through? They are logical, there are many arguments there that are strong, but we know the reality is that socialism failed, capitalism is stronger, as my book says, capitalism, alone. It comes in two varieties, but the change is very different to what Schumpeter envisaged. So, what were the arguments that I think that one can distill about the fall of failure of capitalism? First, it's really large joint stock companies and monopolies that first are not innovative as in the past, although dynamically, as he says several times, many times actually, dynamically they can be more efficient than the small companies of the Adam Smith time, because as you know, he believed that actually the static efficiency is not sufficient for growth. Actually, as he says explicitly, Schumpeter says explicitly, being in a non-equilibrium solution in two different periods can actually give you a higher growth rate than if you're in an equilibrium solution in both periods. But there is in large companies with lots of shareholders, with management that is kind of unrelated to a large extent or not sufficiently controlled by shareholders, innovation would not be, or the role of entrepreneur more exactly, will not be the same as before. He says, entrepreneur is to capitalism what a knight was to feudalism. Entrepreneur is the person who, as we know from theory of economic development, changes the combination of the factors of production of goods, of machines, of material, creates something new. And if that entrepreneurial role is weakened in a large monopolistic company, then this kind of weakens the economic attractive of strength of capitalism. As I will see in a moment, it makes the transition to socialism also easy. But let's go for the second reason and the third, which I think very interesting. The second is the attachment to private property by a large number of small shareholders is much weaker, Schumpeter says, than the attachment to private property of one entrepreneur/capitalist who works with his own company. So he puts this attachment, and it really puts that as a very important element. And I would explain. And if that entrepreneurial role is weakened in a large monopolistic company, then this kind of weakens the economic attractive of strength of capitalism. As I will see in a moment, it makes the transition to socialism also easy. But let's go for the second reason and the third, which I think very interesting. The second is the attachment to private property by a large number of small shareholders is much weaker, Schumpeter says, than the attachment to private property of one entrepreneur/capitalist who works with his own company. So he puts this attachment, and it really puts that as a very important element. And I will explain also in a moment why it would make transition to socialism according to Schumpeter easy. The third one, which is still in superstructure, interestingly, is the increasing hostility to private property by the intellectuals and by the general sort of intellectual public. And that I think is very important for Schumpeter. So he says this lack of attachment, they are both ideological things. Lack of attachment, to some sense, is ideological, and hostility to the private enterprise. So this would be the main reason. I think one would be economic, but that's not a really determining reason. And the other two would be really ideological reasons. And here, which is I think interesting, he's similar to Pareto and even to Tocqueville, because of that fear that the strength of the capitalist ideology or attachment is not sufficiently strong. I think it's very clear, and I will not talk about Pareto now, but if you read Pareto, it's very clear that he believed that the attachment to socialist ideas is much stronger among people who are partisans of socialism than the attachment to private properties among people who are benefiting ideologically agree with them. So these are the issues. There are of course contradictions there because, as I said before, Schumpeter also believes that large monopolies can be efficient. So really, the economic reason for the fall of capitalism does not really is not particularly strong. But I think this lack of ideological zeal that it inspires is an important, most important, I would say, fact. Now, very briefly, why would then socialism, how would transition, there is a title of the chapter, transition, because it's transition the other way compared to the transition that we have witnessed. How would actually socialism take over and how successful it would be? I would be brief here because, of course, how it would take over, because it's simply a continuation of large-scale capitalism. Then again, think of this, and I think it's useful to think, because of Schumpeter at the time in 1942. Think of Leon Blum's France. Think of after the war, nationalization of coal mines in Belgium. Think of Clement Attlee and Labour Party. It was relatively easy. Even think of Chinese Revolution that essentially, took over private companies, gave some money to shareholders. You can imagine, and actually it happened, that you have a parliamentary act. Since the attachment of shareholders is relatively weak, you essentially transform the companies into, private companies, joint stock companies, into public corporations. So he says basically, he says in a nutshell, socialization of the means of production means a stride beyond big business on the way that has been chalked out before, and what amounts to the same thing, the socialist management may conceivably prove even superior to the big business capitalism in the same way that big business capitalism has proven superior to small scale capitalism. So it's kind of natural, it's not a very big deal. To replace one sort of, even to keep the managers the same, but simply to replace the many dispersed owners by one owner. And he's very unambiguous on that. It's centralized socialism, and there is a board. So it's he doesn't use the word of a planning board, but he uses the word board. But it's very clear that he doesn't mean decentralized socialism, he means centralized socialism. Now, what were the advantages of socialism in the sphere of ideology? He says it would command greater loyalty from people, and interestingly, that would enable socialist authorities to deal much more decisively with those who don't agree with, he doesn't use the word, with dissidents. Why? Because he says with private property, capitalist and bourgeoisie freely would accept, and he uses the France under Louis Philippe, would accept that you should strike, but they would not accept that you limit right of, freedom of opinion. Because they're afraid that if you limit freedom of opinion, expressing opinion, and actually undermine the capitalist system through, speech and writing, maybe the next step would be elimination of private property. But if you have a single state like the socialist state, which combines loyalty of people, you can just get rid of all these malcontents, which he sees as an advantage in terms of management. Malcontents would be managed, but they would be managed well because the loyalty of the public would be on the side of socialism, so there would be not a big outcry if it happens. Finally, the last point is interesting point for me because inequality is very briefly mentioned. He says there will be certain efficiency gains with socialism. If the gain would be that the incomes which are received by rentiers, which are really to some extent unnecessary incomes because these people do nothing basically, they just have money and they have shares, he puts the number relatively low to 1-2% of GDP, would be actually received by the state. The state would be able to distribute that money more or less to everybody, and then people to us. Then with the greater equality, if there is greater equality, there will be greater happiness, doesn't use the word happiness, but greater satisfaction among people. And interestingly, for somebody like me, he goes there to a very utilitarian perspective that you find in Dalton and then afterwards in Tony Atkinson's manual, is that basically the more equal the distribution, the greater is overall social wealth. Which I found interesting because, as you know, he's a huge critic, enormous critic, an acerbic critic of utilitarianism. But he, de facto here, uses essentially an utilitarian argument for greater happiness. So this would be like why, and there are several small reasons why I will not go into that, why he believes that socialism would function and would be able to replace capitalism and function. Now, the big last part of my talk is where did he go wrong? I think we have to ask ourselves, if I go through all of what I said, and I don't think that I invented it, but basically on all counts, the predictions turned out wrong. So the question is actually what? So I would say, first one on which I think he was mistaken and he should have taken this into account, and he doesn't mention that in his discussion of socialism. He doesn't mention socialist calculation, he doesn't mention Lange, Lerner, Barone, Mises, of course. And in 1945 we have Hayek's article about the use of knowledge. He does mention some inefficiencies of bureaucracy, but the idea that dispersed information, which exists in economics life, cannot be centralized is not right. Now, the reason why I would argue, and this is probably my key part, is that it's not that the Schumpeter could not visualize that, but I think that the basic problem was in the vision of technological progress. And let me explain. If your technological vision of technological progress in 1942 is that technological progress is essentially large companies producing standard goods with economies of scale, which means reducing out of a cost of unit of output, you really implicitly have a view that that knowledge and that ability can be concentrated. You have accumulated capital, you know what to produce, you know how to produce it, you produce like 15 stocks rather than 5 stocks, you produce 200 shares rather than 100 shares, and you actually can overtake and be more efficient than large capitalists can, or even small capitalists. And I think that's where the origin, in my opinion, the origin of the mistake was, is that the nature of the current technological progress, which started really basically from the 1980s, was different. It was with personal computers, with decentralized information, with ability to actually effect change in a hugely decentralized manner. That I believe also, and I will come to that, that sort of denied, negated that idea of technological progress, but also made a whole difference to success, or rather failure of socialism and the success of capitalism. Especially as socialism from the 1960s was unable to cope with the new technological revolution. And I don't think it's by accident that we've seen from 1965 onwards in countries like Yugoslavia, Czechoslovakia, Poland, Kosygin reforms in Russia, new economic mechanism in Hungary. Something started not being all right even then. And that in turn made the difference between, on one hand, ability of capitalism to generate innovations, to introduce new entrepreneurship, and think of the fact that all the giants of billions of dollars who exist today are giants of the current technological revolution. And not only in the US, also in China. Most of them have not inherited the money. They are actually the result of the technological revolution the same way that Rockefellers were the result of oil, and Harvard was the result of rail development. So that change in the technological progress and the type of technology made a difference in the success of the two systems. And I think then we go to the infrastructure, to the superstructure level, ideology, made a difference in the ideological acceptance of one system versus another. because the failure of socialism will become more and more apparent. We use the support for that system, and on the other hand, the success of capitalism, and of course the use, which I think he estimated, the use of capitalist money to kind of create what Gramsci calls the hegemony, was very successful in changing the ideological acceptance. So rather than having hostility, as he was saying in 1942 towards capitalism, I think that we have moved at a situation of total hostility first towards socialism when it declined, and also acceptance of capitalism in many ways, which I don't agree with that, but I think I notice it as a natural thing. And so to finish this, I would, and that's of course the challenge to defend, and it's actually a ground on which I may be disagreed with or attacked. I think that the reason why this whole prediction or thinking did not go the way that Schumpeter envisaged was really in a epistemological problem, and it's a problem of predicting technological change. And to quote Nassim Taleb, also I like as an author, when he basically argues that you cannot predict it, and gives a nice example that many would, of course, remember. He says, imagine your tribal chief asking you to write what will be the technology of the future. And you write, well, there will be a wheel. Well, he says, if the advisor to the tribal chief knows that there will be a wheel, then there is already a wheel. The issue of technological progress and entrepreneurship is that precisely, and that's actually the message of Schumpeter in his other work, and in this work too, is that it cannot be predicted. Because an entrepreneur would appear somewhere, we have not expected that at all. We didn't expect Bill Gates, we didn't expect PCs, somewhere, and it would change the nature of the products. And so the last point, so do we criticize then Schumpeter? I think not, because I think this is a fundamental problem that nobody could have solved, and nobody could have forecast this type of technological progress, which also means that when we believe today that we can tell what the artificial intelligence will do, what the robotics will do, and so on, we are also groping in the dark. Because in 40 years, it could be that we go back to Schumpeter and say, well, he was right. So we have to, when we judge him or other people, we have to put the time subscript, which of course Schumpeter would like, because it's a dynamic thing. He may be wrong today, but in 40 years or 80 years, if this lecture is given, he could turn out to be right. Thank you very much.
Say old capitalism. I mean, Standard Oil in 1911 was broken up by the Supreme Court because it was considered an illegal monopoly. Now, I mean, can we imagine a Supreme Court now breaking up Google? And what are the implications of that in your view?
Okay. Well, first, thank you very much. Let me start by first saying, which I think is obvious, that I guess okay. Which is obvious, I think that in my presentation I really wanted to stay within Schumpeter's book section. So I didn't go out of it. I related all the present in the sense of what essentially we know happened compared to what Schumpeter expected. Now I'm very happy that Alisa brought up other issues. I will very briefly mention them. Obviously, in capitalism, socialism, and democracy, not obviously, but that's a fact, the gender issue is non-present. The climate change obviously is not present because it was not an issue then. Or it was not known as an issue then. So it does make a difference. Now I will not go into this whole discussion. It's a huge discussion. I've had this discussion before from the purely point of view of global inequality. Professor Novotny mentioned it before, and Robert as well. I've talked for many years on that, and it's, I think, and the issue, in my opinion, is the following one. It is really a national global accounting issue. If you say that we have, oh, by the way, this is my copy, so I use it now as an envelope. This is actually very well, you're not allowed even to touch it because the book is falling apart. But if this is the envelope of world GDP, and if we want to big growth, well, there are two possibilities. We just keep everybody at the same level of income because with higher income we know that emissions go up. So one possibility, we keep them everybody at the same level, which means we keep 10 to 15% of the people in the world at below absolute poverty. But nobody would agree to that. They would say, no, we don't want people to be at that position. Well, alternatively, if this is the envelope, then we have to take from the rich people here and sort of reduce their incomes and allow others to grow. Well, that means that rich people are actually us sitting in this room will have to have substantial reductions in real income of, order of magnitude 1/3. That's politically not feasible, even if we wanted to do that. So what I'm actually saying on that whole topic, I'm sort of called a techno-optimist, but I believe that through a combination of subsidies, taxes, and other policies, we can possibly solve that while keeping the envelope increasing somewhat, but not out of bounds, which are incompatible with the objectives of the climate control and so on. So that's what my view is on that. So I'm, as I said, a techno-optimist. I believe that people who actually speak of deep growth without taking into account simply national accounts are, how should I say, either intentionally or accidentally not seeing the reality. Maybe intentionally because they know politically it's not feasible, or maybe they just don't want to focus on it, but I don't think it is a policy that is feasible. That's what it is. So I know that many people would disagree with me, but that's what I think. And then finally on the question itself, I know Philip Pont's book. I'm not a specialist on oligopolistic competition and so forth. I do think, actually, anybody who reads Capitalism and Socialism, I actually rereads now, and we notice there are certain similarities, precisely in that creation of large monopolies based on new technologies. When I say new, these are technologies of 30, 40 years. But, we see that monopolization. Now, I was now forced to move, for example, to Outlook, which is a Microsoft. Microsoft wants me to do everything on that. So my papers have to be kept there, my internet has to, everything has to be Microsoft. So clearly, they are actually, and Google on the other hand, and the third and the fourth, they are trying to monopolize. I believe that one should go along the path of the set for the Standard Oil and others. I also agree with you, and again, it's not my area. I don't see the political will to do that, and I see an incredible amount, of course, in Washington, lobbyists. I think actually that Amazon is the number one in the term of total payment for lobbyists and so on. So it is very difficult, I think, to do that. But I do see certain significant similarities between what Schumpeter describes then and now.
My question goes in the direction what you just mentioned. Isn't it that now technological progress is creating monopolies? Because we have this network effects and everything, we have natural monopolies, and frankly speaking, we are now moving in the direction what Schumpeter predicted, and we now have a problem which would be familiar with Schumpeter, because with monopolies have monopoly rents, and our inflation is mostly due, just recent research by the ECB, mostly due to profit increases by companies. So this will lead, in my view, to a backlash, and I wouldn't say that in 40 years, as you said, probably already by next year or the year after that, it will be shown that this will create a problem. For example, being here in Vienna, we have the so-called Red Vienna, which took the housing market out of the market. So
So it's 2/3. It's not in the market. It's stay down. And and this is now an example for others. The Germans are falling over it and looking how to do it.
No, I will just very briefly. I mean, there is nothing much new for me to say. I agree. I mean, with the points you made. I just occurred to me as you were speaking. In fact, a few years ago, I found a book. We will see the connection of Mayakovsky's writings about the United States. He went to the United States in 1925 or 26, and he says it's surprising how underdeveloped is air transportation in the U.S. compared to the railroads. And he says, look, that's very clear. Railroads are actually funding all the politicians, and the air transportation really is new. It's only being born. They have no political power, and railroads are controlling everything. Yesterday or day before, I read an article, which of course we all know, how the U.S. is falling behind tremendously in the development of fast trains. And why is it falling tremendously? Because the air industry has thousands of lobbyists, and the car industry has thousands. So when I put these two things together, I become a little bit optimistic, because what seemed to Mayakovsky evident that air transportation would never change, actually did change. So it could be, obviously I'm not kind of a Cassandra, but it could be that the anti-monopoly policies do actually gain support in Europe and maybe in the United States.
May I just add a comment on the concentration? Because this is a rather interesting part in Schumpeter, because he obviously lived in a period when pre-war there was a very high degree of concentration. So it wasn't a trend towards monopoly, and there was a huge amount of literature and critique of both from the left and from the people who were very interested in rather competitive capitalism. Yeah? I think there's a very, very interesting, I think the most tightly argued chapter in Capital, Social and Democracy on monopolist practices. And he goes over all the models which at that time were developing rapidly. Cournot, there was also the Jordan Robinson's mentioned, yeah, the Chamberlain is mentioned and so on. Yeah, so he goes over each of the models, and I think his critique of all the models were basically still the static nature of the analysis of market structures, yeah? Because I think in his view, of course, there's a continuous evolution of market structures because there are shocks of innovation leading to rents, these are eroded, there is more competitiveness again, etc. Yeah? And I think this is very, very, I think also from a technical point of view, a rather interesting analysis he has there. Of course, he moves very much in the direction which, of course, the later literature on industrial economics refers to, is that you need some degree of competition for innovation to take place as an incentive. So I think he keeps to that. And the other bit, I think, which I wanted to add probably to what Branko was saying, is that his critique of rationality is interesting, yeah? Because obviously in comparison to the whole Austrian school at that time, his analysis, we don't want to maximize, we want to have people who, in a sense you can say there is a link with Keynes also, there is a certain element of decision making under uncertainty which cannot be calculated with rationality, and in fact entrepreneurs need to generate that form of uncertainty where you cannot predict the environment. Yeah? So in many ways, I think we have just talked about it yesterday, he was really an outlier in many ways, yeah? Also an outlier with the economic discussion which was taking place at the time in Austria and on the European continent. So now I don't want to talk more, but Ms. Stadler, yeah. Yeah, and Frau Lissner nach. Just here, yeah.
Thank you very much. Sigrid Stagel, ecological economist from the Vienna University of Economics and Business. Thank you so much, Professor Milanovic, for your presentation. As always, when reading your work, it was intellectually stimulating also to listen to your presentation. But maybe I want to challenge your position a little bit, in the sense, or maybe ask for clarification, let's put it that way. You said it would be difficult to envisage people in rich countries to give up a third of their income for the sake of letting poor people in poor countries have more income so that they get out of poverty, and at the same time we don't produce more because we are way beyond the biophysical limits in some regards. But isn't there another position where at least discussing or at least giving up the goal of maximizing income or increasing income in rich countries, and at the same time growing incomes in poor countries would be sort of a position that would be sort of middle ground, yet still challenging in terms of the paradigm. And this is, I think, what the New Growth movement is trying to do. They're not necessarily saying that GDP needs to be reduced, but what they're arguing is let's move away from the monodimensional goal of increasing GDP and maybe have other societal goals taken into consideration, and maybe GDP is a means to an end and not an end in itself. I would be interested in your views.
Thank you very much. It's I mean, it's a fair point. You know, I actually have lots of respect for many people with whom I have disagreed. For example, Kate Rayworth and Jason Hickman. I agree. I mean, I see their point. I see your point. How should I say? Problem is that we can get rid of GDP and create something else, which I think would be probably desirable, and actually probably it will happen, because GDP itself is a measure that changes, right? But the problem is that production of material goods and also some services is clearly linked to the level of emissions. And as we know, you know, the elasticity between your income and emissions, if your income goes down by 10%, emissions go down up. If it goes up by 10%, emissions go down by 9%. So the elasticity is between 0.9 to 1. So in other words, if we let this envelope increase, there will be necessarily an increase in CO2 emissions. And we can philosophically try to change what are our, how should I say, objectives as individuals. I'm skeptical about that. I wrote about that in Capitalism Alone. I actually believe that one of the reasons, going back to Schumpeter, for capitalism to be a system which never stops and can never stop, is that it actually has to generate these needs in us. And we are doing pretty well. We follow that, and we do also order things by internet. We travel, we consume, and I think in that sense capitalism has been very efficient and successful. Now, can we philosophically change? That's really what I don't think we can, but I may be wrong. I think that if we can, there will be small groups, but they don't influence the main sort of development. So I'm skeptical on that, but as I said, it could be that I'm wrong.
Thank you, Professor Milanovic. My name is Birgit Niesner from the Austrian Central Bank. I really appreciate that you put the work of Schumpeter into context, the historical context. I'm still intrigued by the year 1942. Normally, I think that, I've never lived through such times, but what I know is that in a war economy, central planning is more important, and also very market capitalist oriented societies turn towards this, because otherwise it wouldn't work in those times. So do you think that Schumpeter may have come to a different conclusion if he had written the book 10 years later?
That's an excellent question. I believe that actually most of the arguments were already from the 1930s, and actually this small piece, Can Capitalism Survive, is really, I think, 1936. So I think the arguments are not necessarily, I don't think that they are driven by war economy. I totally agree with you that, of course, as you know, the German war economy was one of the big sort of exemplars for the Bolshevik economy in the 1918 and afterwards. But I don't think that the war, in my opinion, is not present in the book. I think that the book, that's why I said the book really corresponds, in my opinion, better to the 1930s of Europe, and then the post-1945. Although it was written in 1942. But that's my impression. I think that it is kind of a, interestingly, it seems to me it's outside of the war as such, which is of course an interesting question in itself.
By the way, he continued to produce new editions, and the last one is in 53, yeah? but just before the Korean War led to the boom. And at least the version of the book I have, there's a last lecture he gave to the American Economic Association, where he still maintains exactly that. Starts with socialism in the and it's a lecture he couldn't deliver not because he died at that time. So you maintain very much the line of was another good name.
When I first read kind of social democracy, of course, I was really given away where is he right and where is he wrong. But I think this is perhaps a wrong approach. And my question is, couldn't we see this discussion as a kind of a dialectic process? Capitalism antithesis, socialism antithesis, and then there is some kind of a synthesis, and this could be what we have come to know as, let's say, a social market economy. We could also include it as an eco-social market economy. And I think if you take this kind of approach, it is a bit, let's say, closer to realism, closer to a pragmatic perspective.
This is my kind of a ideal comment, because I would actually, and again it would put me at odds with many people, just use your analogy of dialectical approach. But I could actually see political capitalism as being number 3 rather than social market economy. I could see China, if you will, as number 3, because it does combine features of capitalism, innovation, development with political control. So it could be, we don't know. Again, it could be that there is a social market economy, it could be a change in philosophy. That's why it is difficult actually, if you're Schumpeter in 1942, it's difficult to project, to guess what will happen in 2023. But I would currently see China as possible model for many other places. So, check that. That's what we know today.
First of all, thank you very much for very inspiring lectures. I have questions for both of you because you tackled technological change but also inequality. My view is that we live in times of Schumpeter's creative destruction, because fourth industrial revolution, we just have this digitalization taking place, innovation, one after the other, and I think profits from these innovations are very short-lived. And my view is that we really live, that this is really the time of creative destruction. At the same time, they can be very demotivating for entrepreneurial activity. And I recently mentioned cultural problem, that some cultures like the US, it's really a cultural thing to motivate the youth to innovate and be entrepreneurial, but for less developing world, it's not really the case. I personally come from the Balkans, and I can tell you that they don't really teach us that way. So do you think that if this is really true, that we lived in times of creative destruction, where innovations are very short-lived, that we might actually experience booming inequality between developed and less developed world?
Neither of us knows what to say, so we turn on my microphone.
Do you want me to go first?
Yeah, I know.
Okay. Okay, I'm not totally convinced. I see your point. This is obviously very speculative. The U.S. is an entrepreneurial society. It has been for a long time. And actually, one thing that I wanted also to mention, but I didn't, I think that Schumpeter also had mostly in mind, in reality, Europe. U.S. was ideologically always pro-capitalist. And when he speaks of the rising hostility towards the entrepreneurial system, I really think that he had Europe in mind rather than the US. So it is true. But on the other hand, I think it is, if I may say, simplification. I look at Asia. Asia is not, overall, it's still not a very rich continent. But entrepreneurially, it's a continent that is actually quite booming in many respects. And even I would say for Africa, although I'm not necessarily an optimist in terms of their development, but Africa was actually in, for example, electronic payment system, in things like that. Many countries have gone leapfrog. In China that I mentioned, many of us, like 15 years ago, remember that people were saying China will have a trouble going from production of toys and small things into like higher value added. Well, China in many areas, as you know, has actually now become one of the leaders in artificial intelligence, space technology, even airplane construction now where actually starts competing. So I think that this entrepreneurial spirit is alive in many parts of the world, even in poor.
I'm going to brief comments about the United States and entrepreneurial spirit there and creative destruction. Many aspects of the American society, economy, and political structure in the last years and decades have been destroyed and are continuing to be destroyed, and I don't see the creativity coming up with something better and something new. There's a very broad sense in the United States of things have gotten worse and things are going to continue to get worse, and we don't know how it's going to get better. In entrepreneurialism in the United States is still very much an individual project and individual people looking to get rich. And I don't see at all the bigger project of creating something better and new out of all of the destruction that has gone on in the last decade.
Thank you. I want to come back to the question of climate change and growth, and maybe it's more a question that Professor Lippmann, as she raised this issue. I agree totally with what Professor Milanovic said about the alternatives we have. Now we have some tendencies, especially with the younger generation, who change their pattern of consumption. Some go very much online, but they have less cars, in cities and so on. I think it's very, very small changes in regard to the necessity. So does it mean we need more socialism? In that sense, as you mentioned, with the question of kindergartners on that over the environment. At the beginning of the environment discussion in Europe, especially I think that Professor Habermann and others in East Germany, say the environmental question can only be solved with socialist, not dictatorship, but let's say centralized socialist organization. So my question, if we see what is happening or is not happening, do you think we have to go in that direction, or is it no way out?
My answer is that I don't know if it has to be solved with socialism, but it most certainly cannot be solved in a capitalist framework. Remember when that ship got stuck in the Suez Canal a couple of years ago? I was really fascinated, and I read a lot about container ships, and I read something extremely disheartening. The 15 largest container ships in any day produce the same amount of CO2 emissions as guess how many cars? You all have a number in your head? 15 container ships, 750 million cars. And there are hundreds of these container ships. So we can all get hybrid cars, few of us can ride our bikes. It comes down to the structure and the system of we're all consuming way too much stuff. And we're doing that because that's the system that's happening. Capitalism needs growth. And we all want capitalism to do well because so many people have risen out of poverty and life expectancy has gone up tremendously and health and all of that. But it's not sustainable. There are limits.
Oh, sorry. No,
Yeah.
I want to say we do agree and disagree. I mean, I agree that, this was an excellent point. I agree that that some people actually really would like to change their pattern of consumption. I do think it's also a drop in the bucket. It's small. I think that the changes, as you said, the changes are enormous compared to what we are doing. And I don't see the political change, the political willingness to do that despite lots of sort of questioning. And there are bike lanes, and these are all small things. But Cape Railroad has this plan with Amsterdam. It's good. It's one city. But let's not exaggerate. This is a drop in the bucket. Which is not saying that I am against it. I'm just saying that it's, as Schumpeter actually said, a stationary capitalism is an impossibility. And actually he said even, and quite possibly, that the rate of return in a stationary system is zero. Now if the rate of return, average rate of return is zero, like why would on average an entrepreneur invest at all? Because if on average your return is zero, you're not going, somebody might invest, but not too many people. So it is true that actually capitalism requires growth, and I think it's a good thing, except that we need to find a solution which, as I was saying before, needs a technological or economic solution. So, but we do agree that there is a solution.
I want to just came to mind. I want to share personal points about socialism and entrepreneurship. So, as I said, I come from the United States, and when my father is self-employed, and when I first moved here, I looked around and I thought, wow, I would never start a business here. The state has way too much control over everything that goes on. Well, anyway, 12 years later, I started my own business recently, so I'm now also self-employed, and it is crazy how expensive it is, and it's very difficult to be entrepreneurial in this structure and in this system, and yet there have to be regulations. But I see these days at a personal level the tension between socialism and entrepreneurialism.
Thank you
Welcome to the real world.
Thank you for this fascinating talk. I also graduated from UMass Amherst, so I get the chance to read many classicals, including the Schumpeter. And actually, one of my professors who recently passed away, Herb Gintes, had a major critique of Schumpeter, and I would like to hear your opinion as in my own, in a way, because in his one of points that he raised, why actually Schumpeter was wrong was because of his, in a way, simplification of these two systems, right? Both capitalism and socialism, in Schumpeter's word, and I'm putting in layman terms, is all about the competent and innovative entrepreneurship. The systems are successful, or their ranking is based on this idea, and even political democracy in Schumpeter's word is about generation or sustainable, maintenance of the entrepreneurship. And probably, as Herb Gintes, and I agree there, these systems are more than that, right? There are values, there's property rights, there are all kinds of other things that people associate or the systems generate and then reinforce, which actually transform both the functioning of the systems itself. So the entrepreneurship, for example, under capitalism, even with monopoly and concentration, doesn't have to go down as much as Schumpeter expected, because capitalism also, in a way, breeds other values or other things that might actually nurture entrepreneurship. So I was wondering what you think of this type of criticism, and my add-on to that is I think the biggest problem here, or the biggest question here, is the social relations that both of these systems generate, and that in a way suggests which road we take, whether it is market socialism or Chinese model, that might be the solution, or the model, or the third way that we might have in the future. Thank you.
Well, very briefly, I understand your point actually, and I like very much Bob Gintes' book, with Sam Bowles, which actually has, I think, a capitalism and democracy. I think it's called very similar to that. But I would like to only to make one terminological clarification, also with respect to what Alisa was saying. The term socialism is now being used really in a most nebulous way. I use it in my book, Capitalism Alone, and Schumpeter uses it, and I use it actually basically the way that Marx and Max Weber have used it. It's a very simple definition, is that there is actually no private property in a dominant way, and that there is no decentralized coordination, and that's very simple. And capitalism is likewise very simple by the opposite, hard labor, decentralized coordination, private property of the means of production. Nowadays, especially in the US, socialism is used in the most nebulous way. So I have a problem when people say I would like to do this or that, and capitalism is not a solution, and socialism is a solution, that I really honestly don't understand what they mean by that word. If they were to tell me that they're in favor of abolishing private property, I think it's a legitimate point. But then they should say, yes, we are in favor of abolishing, and then we will have a state property. It's okay, because at least I understand. But if it becomes all mixed up, and then really it's very difficult to know what we disagree. Because I'm in favor of public lanes for bikes, and I'm in favor of garbage selection, in different recyclable and not recyclable. But I don't think that I should call that social.
Anybody, yes, yeah, lady over there.
Hello, my name is Clara. I'm actually a student, but I'm really surprised about the questions that were asked already. So I'm a bit nervous, but still, now I want to ask more questions because I feel like it's actually okay to ask all of these questions. So it was really, really interesting, and yeah, I also study at VU at the University of Economics in Vienna. And no, I never read Schumpeter, no, I never read Marx or anything like this. But I'm a big fan of Schumpeter, and I'm also a big fan of Marx actually. So this was perfect for me, this lecture. But my question, so to come back to it, when we talk about how economics have changed like in the past years, the first thing that actually comes to my mind is how the core of our economics and economy is actually turned to asset manager capitalism and financialization and stuff like that. And if we talk about all of this, then my question would be how to deal actually with things like BlackRock or just asset manager capitalism. Isn't this like a big change also in how we view entrepreneurship or stuff like that in general, and how can this be viewed like in a Schumpeterian way also? So thank you.
I don't know how to deal with BlackRock. Economics, in my view, and the people in the room who know me, know that I think this needs to be taught differently, needs to be taught in a more open way. As I said to my students just a few hours ago, actually, my view of how economics is taught these days is that students are learning how economists think. So they're learning the tools that economists use. Students are finishing their degrees and have no idea about the economy, have no idea how to answer economic questions, or not no idea, that's a little exaggerated. It's maybe like calling biking socialism. But economics is these days very much about learning tools, and that is frustrating to them. Many students tell me every single year how disappointed they are that they didn't learn what's going on in the economy, but they're very good at math. I am of the opinion that economics education needs quite an overhaul to deal exactly with these issues of what's going on today. If a student has a bachelor's degree and opens the newspaper, they need to be able to have something to say about it.
I couldn't agree more, actually. I think that it is, in many ways, it's kind of almost scandalous how it is being. But it's very difficult to change, but I think it is true, when just one small episode I've heard it, or I think I read, actually, that there was one famous professor who was, his main thing was actually that he was very good in teaching his students how to publish papers and have a great CV. It's true from a purely utilitarian point of view. Like if you're a student, maybe that's really what you should learn. Like how to structure the paper so that it gets published, so then you get a reference on your CV and you get a job. So then
governments are very active economically, but it's not a socialist country. So I think this alternative of an active capitalism, if I may call it like this, has not been discussed so far, and I think that is something which is missing. And the footnote, I can't avoid liking footnotes as an academic, to the comment on the big ships in the Suez Canal. I don't know how many people know what they are powered with. I don't know whether bunker strikes any, no, doesn't. I don't mean golfing, but I mean bunker in the sense of the crude industry, crude oil industry. If you go to a refinery, you have different qualities of product. The highest quality for chemical industry, then less high quality, etc., until you come, so to say, to the refuse of the refuse. That's left over, so to the pieces of crude oil, and that is bunker. You're not allowed to drive your engines with bunker within the national frontiers of the country. So what the ships do, they do it outside the national frontiers, and no one even mentions it. There is no attempt, to my knowledge, to stop the use of bunker. It would be easy if the big economists, the US, the EU, and maybe one or two others would agree to do it, but no one does it. And in spite of that, they tell us if we book cover, your pot, that will save a lot of energy, even though our Minister of the Environment is not aware that you can't always cover your pot if you produce a good phone. Any chef will tell you can't cover your pot. Thank you.
Because it's an important point, just to be again terminologically very clear. I, in the book and in my conversations, I don't call China socialist. It is a capitalist country. The 80% of value added is produced in the private sector. Employment is, including self-employed in agriculture, is 90% private, not state. So I call China in the book political capitalism, which of course is Max Weber's theory, or you can call it state capitalism. So I do actually think that China is a capitalist country. Now, when I speak on the internet in China, of course people tell me that's socialism with Chinese characteristics. I mean, okay, we can actually change the terms, but for the sake of the argument, for the sake of presentation. But I do believe that China is in this economic sense a capitalist country with a large, of course, influence of state, as we said. South Korea has it, Taiwan has it, Singapore has it. So these are activist states in the capitalist environment. The fact that it has a party which is called Communist Party, Singapore de facto has also one party. It can be called many names. But I just wanted to make it clear that I didn't call China socialist.
And just one point, in terms of Taiwan, that is maybe a capitalist country, but a completely monopolistic economy. 90% of our computer chips come from Taiwan. So that is like a world monopoly that is run in many senses by the government for exactly that reason, that's the monopoly, the most important monopoly maybe in the world right now.
Yeah, I'm just Ralph from the Institute for International Economic Studies, but I have to say I'm not in comments, but thank you so much for the very interesting presentation and the comments from this room. Concerning the expansionist nature of capitalism, you mentioned something very interesting before. You held the book in your hand and said, okay, it's because it's politically not feasible to redistribute 1/3 of the world's wealth to the poorest countries, but you still said it is possible to grow the pie a little bit, but with some taxation and good economic policies, it would be possible to grow the pie a little bit, but still solve this huge problem of inequality. Could you elaborate a little bit more on that? Thank you.
I have to disappoint you. I cannot elaborate much because, it does require much more, how should I say, data work. I have not done that, There are people, for example, there are several people, including Lucas Chancel from Paris School of Economics, who's done it in his dissertation. Robert Jones, actually, in the whole database that is still not used, we have the most detailed classification, more than 100 categories of consumption. And for each of them, you could actually put carbon intensity, and then through input output table, you can even relate it to the production. But it's an enormous work, which I think so far nobody has done in such detail. So I cannot say much, but this is in a priori view. I do think that by the use of the incentives, well, that's why I did it by the use of incentives, we would be able to sort of change the emission intensity of our GDP. Let's put it like that. But I cannot prove to you that we would be able to stay within, 1.5%. And I don't know that. I just rely on other people if they can find that out or not.
It's actually not from out of space, it's from very much in the room, because it is my question. There is no question from the audience. So actually it's a comment and a question. So Ewald Robert has reminded us in the beginning that Schumpeter's most well-known work is about innovation, right? So I found it really bold, and I like that boldness of you, to criticize Schumpeter by saying that he didn't get innovation part of why socialism didn't succeed, but capitalism did. The question is really a follow-up question to Clara, or as they say these days, mansplaining, because I don't think you did answer the interesting part of her question. When she mentioned BlackRock, I immediately came to my mind that BlackRock is the biggest shareholder, one of the three biggest shareholders, and I think half of 100 biggest US companies. So it's really a hugely important company that really shapes many decisions in corporate America, right? So in a sense, the question is, isn't it the way beyond capitalism, or the spirit of the entrepreneur in capitalism, if one company really controls them all, and in some cases might have an interest in telling one company not to compete with another? That is a specific example. Tell Google not to compete with Microsoft in the same products yet, because that is of course what Schumpeter and entrepreneur do. This is what you say was the reason capitalism succeeded. But then in the end, it turns out that if it's all over one big company, then there is not that competition around. So are we, in a way, in a socialist capitalism right now?
Or capitalism, socialism. It's an excellent comment. It kind of pushes, what should I say? It pushes monopolization and the oligopolistic stuff even further. In other words, the example that you gave, we can visualize it like one or two large investing companies that basically control everything. Well, maybe it goes back, I don't know, this is another historical discussion, but basically it goes back to the literature of pre-World War I. I think that we have, there is, I think not accidental that we have these issues at a time of very fast technological change. I mentioned before Rockefellers and Carnegies and others. It is, a time when people bring things up, they want to monopolize. I mean, that's why they protect, their intellectual property. And then maybe the state has to react against that and to stop them from doing it. But it's an excellent point, because I like the idea that basically monopolization would move even further from production, would move even in the, like BlackRock, in the control of the investment, where the investor would actually basically tell a company, as you said, you don't compete there, so we are going to divide the pie, which again I think it was the issue of before World War I, with large concerns which would divide up the world and production.
Which we didn't expect actually in some of your in your presentation. It's similar as when one reads Schumpeter. I think it's interesting that it's a person, there's a bit of an analogy with our generation, who made his formative contribution in a period of optimism, of course, basically, because it was really a pre-World War I world, which was expanding innovative technological progress, also trickling down to some extent. Income distribution has probably widened, but there was still quite a bit of growth in terms of income of the low-income groups. Then he moved to a world which things looked like collapse, for a long time, but he tried to analyze trends, evolutions in the system he was living in. And overall, I think he ends up with a book which is rather gloomy, although he continues to emphasize, I don't want to let my feelings get in the way of analysis at all. He continuously to emphasize that. And to some extent, we are living in a period, I think, of a similar nature, yeah? Where at least in some parts of the world, at least where we were fortunate to live, where we feel we had a good run, basically, yeah? I think the questions which he's posing is suddenly emerging, re-emerging, which we thought we had left behind, namely, what system are we moving towards, yeah? And I think this is the thing he's grappling with, basically. I mean, he's courageous in a sense that he's trying to project what he thinks is the most likely, but of course it opens up to many other alternatives, yeah? And this is the world we are facing at the moment. What direction are we moving? And it's not just a binary socialism, capitalism, whatever. We know a lot of varieties. We have liberal capitalism, we have, and I think we have other surprises, which I think from his point of view is interesting. Socialism is not linked to some extent with the Russian experience. Bolshevism has small elements in the book. He really, when he says socialism will be victorious, it's a type of social democracy which he's outlining. And I think the thing which you emphasize, which is, I think, very interesting. And I remember a reading group which Professor Winkler organized when I was a student at the university, where we actually read the Schumpeter book, Capital and Social Democracy, and overall, being rather young, rebellious students, we were rather disappointing with it, yeah? But I think what he pointed out there is a bit of an analogy with the book we were quite interested at that time, which was Habermas's Legitimation Crisis of Late Capitalism, which also inverts this issue of, is it the base or the ideology, the social structures, the cultural elements, which actually are shaping systemic changes here? And I think he poses very much this point, and I think probably it's an open question which of these two are really pushing the current world. Anyway, we had a rather exciting discussion and I think a wonderful lecture by both of you. Thank you very much. I just wanted to mention one more thing to the governor and to the central bank who are hosting us from many locations already, and the city of Vienna, who also supports these events quite strongly in terms of allowing us to bring such wonderful speakers to give these lectures in our society. Thank you very much. Thank you very much. Thank you.
Good evening. My name is Chase Robinson, and as president, I have the privilege of welcoming you to the Graduate Center of the City University of New York. What is the relationship between globalization and income inequality? That's the question that Branko Milanovic poses in his newest book, Global Inequality, A New Approach to the Age of Globalization. In it, Branko highlights an intriguing paradox. Even as inequality has soared within many countries, it's fallen dramatically at the global level. Specifically, he writes about who has been helped the most by globalization, who's been held back, and what policies might tilt the balance towards economic justice. His is a departure from the traditional approach of examining inequality exclusively within countries. And based on the reviews the book has received over the last few weeks, it is something of a sensation. The Financial Times calls it informative, wide-ranging, scholarly, and imaginative, adding significantly to important recent works by Thomas Piketty, Anthony Atkinson, and François Bourguignon. The Economist, another example, said that Milanovic theorizing chips away at tired economic orthodoxies. How fortunate, then, are we not just to feature one of the most prominent thinkers on the topic of inequality, our author, but three, all of whom are based here at the Graduate Center. Now this intellectual capital speaks volumes not just about the Graduate Center, but about also the City University of New York, which is itself an extraordinary project in reducing inequality and increasing opportunity. Of the university.
Creating the best performing irons for every player.
Everybody, Peter Zine here, coming to you from Phoenix, where it's 180 bajillion degrees outside, so we're going to do this one from inside. A lot of you have written in, and honestly, I was pretty curious myself about something that's going on in China with the telecommunications firm Huawei. Now, that is a firm that stands accused, or guilty, really, of trying to modify wireless equipment and cellular equipment for the wider world so that the Chinese government can have a cheap and easy insight into everyone's communications. They got discovered by the Australians. The Australians basically ordered everybody else, and now we're dealing with widespread sanction led by the Americans, but participating by every major country in the world that does the production of cellular equipment. And it's kind of crushed their business model. Now, in the last month, they have released a new phone, which is the first in a while, because it took them a while to do anything without the ability to import equipment from anywhere else. And it has a 7 nanometer chip in it. And for those of you who've been watching me for a while, I've said that there's not a lot that the Chinese can do that's better than 90 nanometers. That's what they can do themselves without external help. And 28 nanometers, because of sanctions, is about the best they can hope for. So 7, obviously, potentially a very big deal. So we took a little bit of time, we dug into the details, and the short version is I'm not as worried as I was when this first came out. And it has to do with what the Chinese have access to. There are two types of chip-making styles. The first uses something called deep ultraviolet, and that's what was used for this chip. Now, this is an older technology that has a number of drawbacks. You basically have to customize your equipment and modify your equipment for each individual chip design. So every time you have a new design, you have to kind of overhaul your factory and your lithography system from the ground up. And the way that the Chinese have done this is basically pirating design details from TSMC in Taiwan, and then hiring just a huge number of people to do some technology transfer. They basically, especially when sanctions kicked in, this basically were told they had a bottomless budget to go out and build a sub-10 nanometer chip. And they did, and it cost them 5 times as much as it should have. And the chip that they ended up making wasn't that great because they couldn't do the design. That information, those people, they weren't able to hire away. So it's basically a crypto mining chip made with a little bit smaller etching. Which means that for a phone, it's really not a great option. More importantly, probably from the Dutch point of view, the Dutch are looking at this equipment, is that this theft started well before the sanctions were in. The sanctions have been in place for 2, maybe 3 years now. This started 5 years ago. So it is the ultimate expression of what the Chinese can do with a bottomless supply of money and absolutely no risk ethics, and we're able to hire anyone they want, all of which is threatening the sanctions regime. So kudos for being able to get something sub-7, but it's only about as good as your average smartphone from maybe 2017, which is not nothing, but it's certainly not the breakthrough that some people think it is. The second sort of technology is called extreme ultraviolet, and that is what you do to do all the chips and leading-edge chips now, especially the 3 and 5 nanometers that most smartphone folks are wanting to put in their machines. This system is much more modular, and you don't have to rebuild it from the ground up. So when it finally did come online, which was just like maybe about 3 years ago, everyone was really excited because all of a sudden the time target for bringing the design to production could be shrunk. Still talking months to years, but you don't have to refabricate everything within your facility every time you have a new chip design. And so far, it seems to be performing to snuff. And it's this sort of equipment that the Chinese can't get at all. In fact, don't have any of at all in the country. So the DUV, they were able to use the stuff that they had and buy stuff that was no longer restricted, or it wasn't restricted yet, combined with a huge amount of subsidies, combined with a lot of poaching, and they were able to cobble together a phone that does do something that's technically sub 10 millimeter, even though it doesn't perform anywhere like that for a phone. The EUV is simply off the market for them, and everyone else is moving forward. So, from my point of view, this is really instructive. Think of it like this way. Think of it like I had said that the Chinese couldn't build a television, and I'm thinking like those OLEDs that you hang on the wall, that were like 10 pounds, this like good and E-flat and blah, blah, blah. And it's like I can build a TV, and they came out with like a 48-inch tube TV. It's technically a TV. Technically, I was wrong, but in terms of the technology, it is not something that really takes them forward. If anything, this is a one-off, because they can't use the stuff to advance because they don't know how to make that chips. And the reason that DUV was ultimately abandoned is by the time you got to about 15 nanometers, it was really skirting the edge of what you can do with physics, because the wavelength for the light is wider than what you need to etch on the chip. And they basically had to tweak the laws of physics to get down to 7, and that's the upper threshold. But even doing something a little bit dumber than that, it's not clear that the Chinese have the ability because they no longer have access to the expertise in touch. So, this is really, really illuminating to me for how far the Chinese are willing to go in order to say that they broke the sanctions. Because they really did it. There's nothing about this that is homegrown. There's nothing about this that is replicable. In fact, there's a possibility that may kind of fall into that category of stupid things that they've been doing lately, in that you've got a number of people in the American Congress who are not interested in doing a week of research to figure out the details. We're just like, oh, why are we breaking sanctions? Well, we'll show them. We'll just put in front of the president a bill that says that all technological transfers and sales to Huawei are now illegal. So not just the top-up stuff, everything. It's Congress who knows how that's ultimately going to shake out. But the Chinese are finding more and more ways to sacrifice their position on the altar of ego, and it looks like this might be one more. All right, everyone take care.
There's nothing more powerful than you making your thing happen. Really going.
That the owners of property, owners of capital have been rich. But if the ownership of capital is equally distributed, the rising share of capital would actually reduce income inequality. Now, why it is not reducing it is because capital income and wealth are extremely heavily concentrated, and they are not concentrated among the poor, but they are concentrated among the rich. So that's why you have the rising capital share quasi-automatically getting translated into the rising interpersonal inequality. Then I discussed higher rate of return on the assets of the rich, which is I think very interesting topic, which you have to ask yourself, if I have assets of $1,000 or $1 million, is the likelihood of me having the same rate of return the same? And of course, very often that's not the case. People who have higher assets also have higher rate of return, which of course is not the rate of inequality. And then I would think about so I will skip that about the association. I mean, I'll show you a graph, so I'll skip it right now. Association between high capital and labor income, which I called, because I was the first to invent this, homo plutia. Comes from Greek, and obviously, how are you going when you invent a new word? You go back to Greek and you put two words which you look onto Google, and then later check with your Greek friends, does it make sense? Well, at first, of course, they don't understand. They say, well, it doesn't make any sense, but they say, okay, give me another better word. But they're short of words. They say, okay, fine, and take this neologism and run with it. So that's what I did with homoplutia. We'll explain that in a minute. And then homogamy, which is an interesting topic, is that we're increasing assortative mating of rich people marrying each other. And then finally, leads to really what I think is crucial, last two crucial points. I will not really talk much about them today, but they are absolutely crucial, is the political control of the rich, because if you don't have political control, I call that tying the knot on power, then basically that power can actually evaporate. But if you have the political control on political power, then you make sure that that economic power stays with you and moreover gets transmitted to your children. And that's the last 6 points. So let me then simply give you some empirical illustrations. Obviously all of them is quite empirically sort of demonstrated in the book, but let me just give you two of them. This is the graph that shows you the Gini coefficient, which is a measure of inequality. So the higher the Gini coefficient, the higher inequality of capital incomes and labor incomes. Labor incomes are red, capital incomes are blue. So what is striking there is huge gap between inequality with which capital incomes are distributed versus labor incomes. We're talking about the Gini coefficient of the blue line of 0.9, which is like really extremely high. It's like if you have the temperature, it would be the temperature which is among the highest temperatures that you can imagine. And the red line, which of course is increasing also because labor income is becoming more unequally distributed. Look at the case of the UK in the 1990s and the Margaret Thatcher, that goes significantly up. Always remains, however, less than equal than the blue line. So the very fact that the blue line always dominates, if you will, the red line essentially means what I was saying before, that the rising share of capital in total income quasi-automatically pushes you toward the rising inequality between individuals. And I've taken here 4 countries. I actually have, dozens of countries. Most of that comes from Luxembourg Econ study, and of course all of them show basically the same results. Now, the homoplutia, as I already mentioned, is the presence among some same people of both high labor and capital income. Here, this is based on the US data. You can see actually the percentage of people who are in the top decile by labor and by capital increasing constantly. Think of the following fact. If that number was 0, then you would be really in the world of classical capitalism where the capitalists don't really work as they don't double as wage workers. And if that number were to become 100, that's an interesting sort of thought experiment. How would a society be where everybody, the top people, are both rich, all of them are rich in terms of labor income, so they really have very high labor income, and they have a capital. It raises many issues, some of them we may discuss, some of them you can read about in the book, how to tax such a society, whether it is easier or harder, how it differs from classical capitalism. So then let me move very briefly on the case of political capitalism of China. Each of my chapters has a very nice introductory, I think, epigraph. This one is from Aristotle, as you can see, and I think it's very appropriate for a society like China. The political capitalism, I define it here again very quickly as the 3 essential features. First one, the efficient bureaucracy or efficient administration. The second, absence of the rule of law. And third, the state autonomy. The state autonomy means that you actually are not, the state is not captured by interest, whether capitalist or other interest, but it has the autonomy of acting and doing whatever it wants. Now, the contrast between, or the contradiction between the first and the second principle means that essentially you have to have bureaucracy, which is sort of a Bavarian type of bureaucracy, but that bureaucracy cannot follow the rule of law all the time, because you need to have discretionary power to actually punish somebody or to give privileges to somebody else. And that leads to what I argue, to the fact that corruption is endemic or imminent to such a system. So in other words, corruption is not an anomaly in such a system, but it's really an integral part of the system. I'll show you a few graphs of that. So this is one of the many ways that you can, of course, look at the corruption in China. These are the official data. This is the amount of income, or actually bribery, that has been received at different levels of administration, county, prefecture, and provincial level. What you notice here is that actually as you go towards the higher levels from left to right, the amount of corruption rises, which is not surprising because obviously you can give greater bribery, or you are selling the jobs or posts for more money if they are more powerful jobs, and it goes up. Also, the red line, the red bar rather, shows you the level of corruption within the Communist Party apparatus. These are official data. They have actually thousands of names of people and how much money they made and over what years, or whether they are part of an organized group or they were just doing it by themselves. And secondly, that you see that actually in most cases, in this case 2 out of 3 in a different slide that I would show you also, it's actually in all cases the red bar is higher than the blue bar. So basically that's obviously where the power is and where the corruption is. I'm being asked very energetically to stop, and I will stop in 1 second. But I want to show you another graph from China which shows that here the Chinese elite, the top 5%, and again focuses in this case on the CCP, Chinese Communist Party membership. And what you notice in this graph is that, I mean, if you look very carefully at that graph, is that the members at the level of the top 10% and top 5%, these are the first 2 slides, they actually have the same income as the other people in the top 10% and top 5%. And the top 1%, they have significantly higher incomes. And what is also interesting, that gain is particularly strong among people who are actually private entrepreneurs. So that's where you have this combination of political and economic power of which I was speaking before. And unnecessary to say, you have that same, of course, combination of political and economic power in the United States. This I've already mentioned, so I will skip this graph. This is the chapter 4. That's a kind of a full chapter, but I will not have to say anything else. And I would also simply highlight the fact that in this case I deal with migration, and I'm arguing that there is an inverse relationship, that this is a controversial point, that if you give migrants fewer rights, domestic population will be more likely to accept greater migration. I wrote that particularly with the view of what is happening today in Europe, where there is basically really rejection of migration, despite the fact that the continent is actually aging and in need of migrants, but for political and cultural reasons they are rejecting them. And then finally, it is my last slide that actually I think illustrates quite well what I discussed in the last chapter, where I discussed actually the rule of capitalism in our ordinary life and in terms of the value system that we have more or less all accepted, and contribute to the further sort of growing power of capitalism, not only geographically in China, but also within ourselves and in our private life. So, after exhausting my time more than that, I would like to invite the people who are going to criticize my work, and maybe some of them would praise it as well, and then I hope we'll have a nice discussion. Thank you very much.
Am I on? I seem to be on. Welcome, everybody. Welcome. Thank you very much, President Meiskens, for starting us off this evening. Thank you, Branko, for the whirlwind peak at this extraordinarily complicated book. I'm not a technical entrepreneur person. On behalf of those of us on stage, let me say welcome to everyone here in the audience at the Graduate Center, and welcome to those of you joining us by live stream. We're very excited to be here this evening. Let me just say a few more words of introduction about the book, and I'm going to tell you give a quick roadmap of the conversation this evening. I'm going to keep my comrades disappointed on time here. The book here. Many of you know Branko. Those of you who are in the Graduate Center community, we were here on this very same stage not long ago launching Global Inequality, the book that indeed is known, of course, for the signature chart of the relevant graph, the Elvin chart. And this book is in many ways a sequel. I would say you'll see the footprints of that book, certainly in this one. So for those of you who kind of know the story of global inequality, I definitely encourage you to jump into this one. Also excited to say, as President Meiskens noted, the book is getting a huge amount of attention on Twitter, online, The New Yorker, and The Economist, Foreign Affairs, many places. So all of us at this juncture, we're basking in the praise, and we're hiding from the criticisms. But we are really following chance to follow the book as well. Okay, without too much further ado, this is what I'm going to do this evening. I know you can see this already. It's an extremely wide-ranging book.
There's something that we sort of tolerate in a moment of crisis like COVID, where we find an excuse to embrace the use of fiscal deficits to support the economy, but then over time, once we're through the crisis phase, we pivot back to thinking the deficits need to be pushed to balance, and that surpluses are even more deficits. And so I'm going to have a conversation with you in the next 20 minutes or so about why I think that thinking is wrong. And there's been mention of this book that I wrote that was published in 2020. The book was written before COVID, and so I was trying to enter this debate and to try to shift our thinking so that my hope we could have a more productive conversation, a different kind of debate. It's not that we won't still debate priorities. It's not that political parties won't still have differences of opinion about tax policy and spending money. But I wanted to see that debate rise to a new level, right? And for the focus to shift over this obsession with the number that falls out of the budget box at the end of each year. That's the thing that we're supposed to prioritize and worry about and care about. Did we take care of the deficit? Did we look after the government's finances properly? Have we been good stewards of the fiscal purse? These are not the most important questions in the world. In fact, I don't really care what number falls out of the budget box at the end of each year. I don't think it tells us anything useful or important at all. It's not a good reflection upon the federal government and the job that it has done. Right? So what does then, if the number that comes out of the budget box isn't the thing to pay attention to, what should governments do? And my answer in this book is that we should be worrying about balancing the economy, not the budget. Okay? If you can achieve a balanced economy with a budget surplus, fine. If you can achieve a balanced economy with a budget deficit, that should be fine too. So what does a balanced economy look like? If you look at the Swedish economy today, does it look like it's in balance to you? This is the audience participation part. Does it look like it's in balance? Why? What's wrong with it? What would you fix? Unemployment. The unemployment rate projected in Sweden this year is what? Almost 8%? What else would you fix? Healthcare, social care. What else? Inequality. What? Climate change. The school system. Housing. Inflation. Everything. I heard inflation, but isn't it interesting that that was one of the last things I heard when they came from the future panelists? So leave it to the economists to say inflation, but so you see real problems in the economy. I titled chapter 7 of my book, The Deficits That Matter. The Deficits That Matter. Let's address those. Let's take aim at the real shortfalls, the real deficiencies in our economy. I'm not standing here to suggest to you that I have a magic wand and that we can fix everything overnight, or that we can cure all the errors in the Swedish or the American economy in a year or two. But what I am saying is that we have a lot more capacity to address the deficits that have all of the kinds of things that you just volunteered. There is capacity within the state to begin to address those, but not as long as we are hampered by this broken thinking that the government that budgets most like a household is the government that is most responsible in doing this job. So let's talk about this. First chapter of the book is called Don't Think of a Household. As soon as I say don't think of a household, you all think of a household. But don't think of a household when you think of the finances of the family. So you've all heard probably 1,000 times before some politicians stand up and say to you something like, we need to work with our means. We need to get our fiscal house in order. Am I right? Do they use the term here, fiscal house? It's a house. It's a household metaphor. They're tapping into language that is familiar to us because the finances that we are most familiar with are our own. So when someone says to us, you can't spend more than you pay in, borrowing and running up the credit card, piling on debt, it's irresponsible. We all say, it makes sense to us because in our personal capacity, we wouldn't survive very long, spending year after year, loading weekly in, putting charges on the credit card, taking on debt. Eventually, something will go sideways and we would get our check credit back. So when the government uses that language, we tap into something that's familiar and seems like common sense, and then from that point forward, everything goes off the rails. We start worrying about governments running out of money, running out of debt, passing it on to future generations, and all of the rest of it. So, what is it that makes the federal government different from that most? So, in the book, I say, think of it this way: the federal government is the issuer of the currency. Your currency does not come from you. There's nobody in this room that has the legal authority to issue the currency. Okay? If I try to create dollars in my basement or my garage, it's called counterfeiting. It's illegal, and they'll put me in an orange jumpsuit and off I go. I don't get to do that. States and cities cannot do it. Businesses cannot do it. Which is why when COVID hit, I know you're thinking about banks. Don't do that, okay? You know better than that. We can address that after the federal government gets to choose who, if it wants to create a franchisee, by extension, it allows to create a unit, right, a money thing, but it's not the same as the currency. If it was, the banks would bail themselves out. Okay? So the federal government has a monopoly. They get to create the currency, and afterwards just use the currency. Which is why when COVID hit, businesses struggled. How am I going to put my workers on payroll? Individuals, households suffered. How am I going to pay my bills if I've lost my job because of the pandemic? Mayors, governors across the country were pleading with Congress. Help us, we need money. We can't run essential services. Only the federal government could step up when wheels were coming off the economy and provide income support for households, businesses, to state and local governments. I call it the money bazooka. We pulled out the money bazooka, and Congress fired a lot of money into the economy. And that money helped support people's livelihoods, helped support jobs. It helped to bring about the fastest recovery in U.S. history. We have never seen anything like it. Here we're talking about Great Depression 2.0, and instead we got the most rapid recovery in the history of the United States of America. Shortest recession we've ever had. Fiscal policy, what governments do with their tax and spending levels is extraordinarily powerful. Right? You also have monetary policy. So central banks have the ability to carry out policies that are aimed at creating jobs or slowing down job creation, stimulating or slowing the economy, fighting inflation. So we have these two policy levers on the fiscal and monetary side. After the financial crisis in 2008, we left the whole job up to the central bank. But use monetary policy, try to figure it out, bring about a recovery, and it was awful. It was terrible. The U.S. economy and countries around the world moved into austerity. Fiscal policy tightened up the purse strings, buttoned up the purse pocket, and left the job to the central bank. As a consequence, we had about a decade of economies vastly underperforming their potential. You hear politicians say, live within your means. We live well below our material needs for factors. And people can afford. People lost their homes. Their leisure house, their livelihoods. We had problems we could address. We had the capacity to do it. But we
will end up like the Greeks. There will be a debt crisis here, and that narrative took hold. And the Obama administration and the advisors around President Obama pivoted away from supporting the economy with fiscal policy to austerity, spending cuts, right? And we had drastic spending cuts under President Obama because we got scared of the increase in the deficit, the increase in the debt, watching what was happening in parts of Europe, thinking we were going to end up like that. We were never at risk of ending up like Greece or those countries. Why not? Billionaire investor Warren Buffett said the U.S. is never going to end up like Greece because Greece did something, these are more or less his words, not mine, very stupid. Greece and these other countries gave up their sovereign currencies. They joined the euro and they started borrowing in a currency that is not their own. So Warren Buffett said, if Greece had debt denominated in drachma, they wouldn't have a debt crisis. Now he said they would have other problems, but they would not have a debt crisis. That's a quote. So what made the situation different in the US is that all of the payments that we had promised to make as a nation were denominated in a currency that we and only we can create. You're not going to run out of it. Okay? Money is no object in that sense. We could afford every payment obligation we had because all of the bills were due in US dollars and we issued the currency. The trouble with Greece and other countries is that they started borrowing in a currency that they don't control. It doesn't come from them. So they do have to go to capital markets. They are vulnerable. They do have to pay market prices unless the central bank intervenes, as the ECB did this time, to keep borrowing costs down and accommodate the needs of governments so that they could carry out spending to fight the pandemic and support their economies. But they are vulnerable in ways that you aren't and we aren't in the US by virtue of the fact that we have our own currencies. So a really big and important difference that I try to lay out in the first chapter of the book, the difference between being an issuer and being a user of currency. Now I want to say something about this word deficit and this word debt, and borrowing. These are three words that I would very much like to replace with descriptions that are more accurate, useful, less volatile, and inflammatory. Because the word deficit itself, as soon as you hear it, you think this is negative, right? There is no sentence that you can use, I think. I could challenge you. Come up with a sentence in which you use the word deficit where it's a positive and not a pejorative. Right? If there's a deficit, it's negative. If you turn on the sports game, the football game, and you hear the announcer say, who's your favorite, what's the fan favorite team around here? Okay. I'm not going to try to say it. But you turn on the TV and you hear the announcer say, if is going to come back and win this thing, they're going to have to overcome a 3-point deficit. This is the way we use the word deficit, right? It's always negative, something to overcome, a problem to solve, something to fix. What I want to suggest is that this is not the way we should be describing the budget outcome that shows that the government has added more than it has subtracted. The deficit, government deficit, is the difference between two numbers. That's all it is. The difference between two numbers. The first number is outlays, spending. How much the government is putting into some other part of the economy. First number. Second number, how much the government is taking out, mostly through taxation. Okay? So watch. I will play the role of the government, and you all will be the non-government sector in the economy. So I'm going to do something really evil now. I'm going to run a deficit. Brace yourselves. I'm going to spend 100 in, and I'm only going to tax 90 back out. Now my ledger is going to show a deficit. Somebody's going to write a -10 on the government ledger. What have I just done? I've made a $10 deposit into some part of the economy. put in 100, I take 90 out. There's 10 available out there. My deficit is your financial surplus. Always to the penny. No, we don't debate this. Okay, this is math. This is accounting. So my deficit is your financial surplus. Now let's do the opposite. I'm going to balance my budget. So I'm going to spend 100 into the economy, but I'm going to tax 100 back out. Now I've eliminated my deficit. I don't have a deficit, but you also no longer have a surplus. Okay, let's take it one step further. I'm going to be really responsible now, and I'm going to put my budget in surplus. So I'm going to tax 100.
Between neutral
and I'm going
and
to spend 90 back into the economy.
probably
Now I have 10,
bet.
and you have a minus 10. Does this make sense? This is not controversial. You go get the data, you can plot it, you can see the government's financial balance, and you can put it up against the non-government's financial balance, and it's a mirror image. Whatever's on my spreadsheet, the opposite is on yours, right? Same size, different sign. So now let's talk about, we see the deficit in a different light. Government comes to you and says, I want to eliminate the deficit and put my budget in surplus. Now you can say, hang on, why do you want to drive me into deficit? Every government deficit is good for someone, period. Because on the other side of every government deficit lies a financial windfall, a surplus for someone else. Now the question gets real. For whom and for what? If every deficit is good for someone, who are those deficits serving? Who got that windfall? In the US in 2017, the Republicans under Donald Trump passed huge tax cuts, added about $2 trillion to US deficits. Republicans didn't do that because they think deficits are evil. They did that because they know that deficits serve someone on the other side, that there's a windfall. Somebody gets all of that money. Who got it? Corporations, or his big corporate tax cut went from 35% to 21% corporate income tax rate, and mostly high income earners. 83% of the benefits went to people in the top 1% of the